Okay, hey everybody, it's Luther Wilson III on another YouTube video session here. As a lot of you know, I'm a real estate professional in the Kansas City market, okay, doing sales and investing, all right? And in today's video, I want to talk about managing rentals versus managing seller finance homes, okay? Managing leases and tenants versus managing notes, okay? You got installment agreements and lease options. As you know, my specialty is seller finance transactions, okay? My background's in property management. And over the last decade plus, I've been investing on and off and working closely with lots of different investors, helping them to not only find deals, acquire properties, but get through renovation projects, help sorting out the financing and so forth, and then also with the property management and resale too. And so early on in the game, 2011, even before that, I spent a lot of time looking at how to find deals and then how to structure seller finance transactions, okay? Creative financing is always something that I've been intrigued by. It's something I learned a lot from my dad. As some of you know, my folks have done real estate for 30 plus years, and so I grew up in the business. And so I've seen a lot of different things, had a lot of experiences in the real estate space, primarily on the residential, lots of single family homes, some small, multifamily resale, some larger multifamily resale as well. And I've been able to see inside a real estate investing business, a true real estate investing business, okay? And if you refer back to some of my past videos, I talk about three big things for real estate investing businesses, and it's the capital, the strategy, and the operations. And the key part that I have had a lot of experience with is the operations, okay? So my background, some more, is property management. I've worked for, 4 different property management companies over the last decade, and I've been able to do a number of things working closely with a number of real estate professionals, okay, doing the leasing, of course the sales, doing the maintenance coordinating, and then helping investors through that whole process, okay? And along the way, I would try to encourage my clients and customers to look at seller financing, okay? Because I could kind of see what was happening with the rentals, what was going on, on the back end. I didn't necessarily see so much on the front end, what their capital situation, what their financing and so forth, what their strategy was. But I definitely got to see firsthand what it was like, being on the ground, boots on the ground, if you will, dealing with the tenants and the maintenance and so forth. And so whenever a client would get a vacancy and they were considering their next move, usually after they got a bid from us or a contractor for the make ready or the clean out and so forth, that's when they usually got perked up or they were looking at alternatives. And that's usually when I would say, hey, you don't necessarily have to put as much into that property, okay? You may not even necessarily need to sell it outright. I mean, of course, I wanted to help them with that because me being a realtor, I could put it on the open market or we could sell it off market, I could get a commission or whatever. But I kind of felt for my clients and I'm like, hey, I've seen this property go vacant, 2 times in however long or maybe more, and I'm your second or third property manager, at least that's what I've heard. How about you look at owner financing? And some of them were, intrigued by it, but very few of them actually took me on, okay, for whatever reasons. And so I said, all right, that's fine. I'll keep plugging away. Let me do my thing. Let me, work on my sales, bring in some new clients. We'll get some make readies done. We'll do some renovations and so forth. All along the way, trying to figure out how I could make more seller finance transactions happen. And I realized, okay, I'm probably gonna need to do this on my own because a lot of my clients, their goals, their needs, their experience, they don't necessarily see it. So that's kind of when I started looking at private equity and private capital and so forth. So since then, that was 2018, 2019, me and a couple different partners, along with a handful of clients that I took on along the way, have been able to execute on more seller finance transactions, okay? And so as my portfolio has grown, as I've been able to help more investors do some type of seller financing, it made it very difficult for me to go back to traditional rentals, okay? Not that I wouldn't necessarily, I would definitely have some strong stipulations and so forth that I would want or need as part of that. But now that I have a portfolio of seller finance homes that are performing, and I've helped over a dozen investors over the last handful of years alone do seller financing, it's hard for me to even mess with long-term rentals. If you have a house, I'm talking about a single family home, that's where we've done most of them. A couple times we've been able to do it on a duplex. I've had investors ask me about doing seller financing on a larger multiplex, 6+ units, and I'm like, I don't know, we got to run the numbers. It depends on the underlying debt and so forth. And so looking at managing either or, okay? Managing a single family home rental, managing a multiplex, okay? On paper, in a spreadsheet versus a reality, okay? When you're dealing with long-term rentals or short-term rentals or whatever kind of rental it is, the operations, the property management, okay, whether you're doing it in-house or you've hired it out third party, it's going to be nonstop. And there's just going to be always something going on. And so we can look at the numbers, and depending on how you calculate things, okay, there's going to be a lot of unknowns, okay? A lot of times rental owners, we get caught up with appreciation over time. We don't necessarily know what that's going to look like, okay? That's one thing on the spreadsheet when you're running your numbers or the calculator, whatever you're using to do your pro forma. The second thing, the actual cost of the maintenance and management, okay? If it's a single family home and maybe you have a package of them and you've outsourced it to a third party property management company, and let's say they're charging 8 to 10%, which is pretty common, okay? There's that part, okay? So whatever rents come in, if they come in, when they come in type of thing, okay, you already got 8 to 10% of your rents that are going to pay the management. Not to mention the maintenance that's going to come up, okay? You may be cool for a month or two, maybe a little bit longer, but the more doors you have, okay, the more opportunity for tenants to go awry, things to happen, domestic situations, the elements, exterior type of things. We could go down the list. That's another piece of the unknown. So besides the appreciation, you got the maintenance and the management costs. The actual property management and maintenance costs could be more like 25 to 40% at the end of the quarter or at the end of the year, okay? And a lot of that depends on the property manager and how they operate. Even if you bring that in-house and you are handling that yourself, or you have an assistant or a partner or a small team to handle that, you're looking at, okay, either outsourcing it and paying more for that, or we can take it in-house, and that's may not necessarily cost us money, out of pocket, but it's going to cost us time and energy to be able to handle that type of thing. And so with the rentals over time, it's really, really hard to say how that's going to play out. Of course, you can raise rents, all right? And if you hold on, like from the 4 companies, the property management companies that I worked for, there was a very small number of rental owners who I worked for that held on beyond a year or two. Okay, and so a lot of investors, entrepreneurs talk about ownership this, ownership that. Well, let's think about control. Let's think about our time freedom, and let's think about the actual cost of it. Because if you can get into an opportunity, however that looks, you may not necessarily own it. You might be splitting those costs with a co-founder or partner, okay? But if you have control and you have more time freedom and so forth, what does that really look like over time, okay? If you could see beyond the spreadsheet and you could see beyond what we've been taught and trained to do, because this is rather unique, it is unorthodox doing seller financing, but I think right now in Q4 2024, by the way, today's Monday, October 21st, the market's different. Things have changed, and I am piping up more, hence these videos, educating, inspiring, collaborating with more investors to do this type of thing, because the opportunity is there. Okay, we have a window right now, and how long it'll stay open, who's to say? It could be 6 months, it could be 20 years. But I believe real estate investing is different now and will be for the foreseeable future. And I truly believe that those with the capital, a solid strategy, the operations, getting that down somehow, okay, are going to be able to succeed and persist and have more sustainability, more sustainable cash flow from their investments. I think that's why a lot of us are doing this, is for cash flow. So I went over the management a little bit on the rental game, okay? And at the end of the day, or at the end of the quarter or year rather, the true cash flow very well could be zero, okay? And the rentals that I've owned, the investors that I've managed rentals for, you know, we talk about real estate investing and investors not really having to pay tax. Well, when you don't make anything, you don't have to pay tax, okay? So on the flip side, seller financing, when we're doing that, it actually produces cash flow, okay? And you gotta just think like the tenants, a lot of times, if you've rented a house before, very rare is it when they plan on staying for 5 to 10 years. A lot of times they're gonna rent that apartment or that unit or that house, and what do they wanna do? They eventually want to buy a home, right? And so you already, just by the nature of the industry, by the nature of rentals in general, we've already set ourselves up to deal with unsustainability, if that's a word, fluctuations in the portfolio, constant outgo of capital and so forth, with the hopes of appreciation, depreciation for sure, yeah, with the hopes of achieving cash flow. And then at some point, if you hang on to that rental, you can exit and maybe do a 1031 exchange. But most of my clients, a majority of them, I haven't thought about an actual number, percentage, but they end up having to exit, or they choose to exit within 1 year or 2 to 3 years because of a lot of the things that I mentioned. It's just not it's not what they thought it was going to be, as far as owning and managing and holding these rentals, right? And so a lot of times it's a wash, or they lost money on it. If they were able to hold on and they took care of the properties and they raised the rent and they figured out the management somehow, they might come out pretty darn good. But again, it's a long-term play. I tell investors 10 years, you want to rock with me, do a deal 10 years. Could be less, but could very well be longer, because that's where we really get to enjoy the true benefits of being a housing provider, a rental owner, an investor, an entrepreneur, that sort of thing. So onto seller financing, when we manage a note, okay, and you can refer back to one of my recent videos where I talked about the different types of seller financing, okay? You got installment agreements and then you got lease purchases. When we're managing a note, or we're managing a resident who's buying the home from us, they treat the property different, okay? They have more skin in the game on the front end, which one of my mentors, okay, kudos to John Burley again, he has a term, it's hurt money. So up front, whether it's a down payment or option money, they're going in with more out of pocket. And then they're also going in with the goal, their plan is to buy the home. So you've already separated yourselves by doing some type of seller financing because they want to stay forever, potentially, and pay the house off. And then maybe before that time, do another one with you. You get the idea? So the upfront money, the psychology behind them owning a home, okay? And then they are going to treat that property and pay you better each and every month because it's theirs. They have, in the case of what we do a lot of times, the contract for deed, they have an affidavit of equitable interest. So they actually have an ownership interest. If it's a lease option, they still have an ownership interest, whether it's recorded or documented somehow. So automatically their mindset going in is longer term and they're gonna treat the property better. Okay, cool. And then as far as us as the seller or the investor on that particular property, however it's structured, you talk about property management, we gotta make our payment, okay, as far as management goes on a seller finance home or property that we have offered home ownership on or ownership to maybe an investor. In most cases, it's gonna be residents. All right, that's a key point that I want to emphasize. When I talk about seller financing, a lot of us investors, we want to acquire a property and have the investor or seller carry back for us, or we could take over their payment. But how many of us are offering some type of seller financing? That is an absolute game changer. And for the investors that I've helped, my partners and I, it doesn't even compare. When you talk about management, I can't even call it property management. It's like asset management, more or less. It's like note management, or I got to come up with a different term, seller finance, home management, resident management, whatever that entails. We got our mortgage payment in a lot of cases, okay? And then we got to make sure that they pay and that they understand that after a certain date, it's late, and here's the late fee and so forth. We got to make sure that they understand the process because they're going to test the water. And then as far as the maintenance and upkeep, they're going to try us on that too. So we have to understand and we have to educate them and let them know the rules and say, hey, this is your home. Okay, so when something comes up, we may just have to gently, remind them of how this thing works. So the property management is nil, okay? If there's something major that comes up, okay, cool. We're gonna have to get that sorted out. If the residents get behind on payments, then we may need to have an attorney draft a letter, a late notice or a default letter, however that looks. Okay, there's some costs there, all right? And then also one other thing I gotta mention on the seller financing, I don't know if I mentioned it earlier, the 3 scary Ds. So for investors that I've met along the way and I've helped, there's 3 main things that come up that they're concerned about or have questions about. And it's something I call the 3 scary Ds. You got default situations, which I just mentioned. You got due on sale clause, and then you got Dodd-Frank. Okay, so refer back to the recent video a few weeks ago that I did on my YouTube channel. Check that out because I dive into that because that is a concern for investors who are wanting to do seller financing of some sort. Okay, so that's part of the management, being able to manage the residents, okay, and manage your business. Okay, the operations are quite a bit different than they would be on a rental. Okay, so there's our mortgage payment. We have to make sure that they're paying us. We have to be concerned, whatever issues arise, if it's an insurance thing, major damage on the property, and then the 3 Ds, okay? Beyond that, it's cash flow, actual cash flow, long-term cash flow, sustainable cash flow. Sign me up, try to get as many of these as humanly possible, okay? And then the business management, because we have our properties in an LLC, okay? At the end of the year, we need to send our residents a statement. If it's an installment agreement, they're gonna get a 1098. There's gonna be an escrow analysis in there, okay? Stating how much went towards principal and interest, what's the remaining balance, okay? Taxes, insurance went up, so your escrow payment's gonna go up, okay? That type of thing, that's a 1098. Again, for the installment agreements. if you're doing a lease option or some type of lease purchase, you still want to have some type of year-end statement stating, okay, here's how much you paid in, all right, and so forth, letting them know where they stand. There's, if you do a 10-year lease option, here's how many years you have left to exercise your option, just a reminder, so on and so forth. As far as management, that's really it. So looking at the two, the rentals versus some type of seller financing, my hope is to be able to encourage more investors to look at seller financing. Of course, if you're in the Kansas City area, hit me up. Upside Property Services is my brokerage. I'm a licensed broker, realtor for Kansas and Missouri. Seller financing is my specialty. I've done it myself. Been learning from my mentors who've been doing this type of thing for the last 30, 40 years. So if you want to make that happen, hit me up, because again, the market's different now. And who's to say how long we'll be in this pattern? But as far as regular rentals go, okay, I've seen it with my clients and other investors out there in the market. We've had to stretch a little bit to try to figure out how to make the numbers work on the multifamily and the single family. As far as me trying to help investors acquire properties, it's gotten a lot harder, because if we're going to be paying 6 to 8% interest, okay, and if we're dealing with additional costs, inflation, labor, material, management costs, operational costs, and so forth, we've been forced to look at alternate ways of creating revenue and cash flow for our real estate ventures, for our real estate business. And we see an amazing opportunity with seller financing, okay? Again, look at some of my past videos, hit me up if you want to learn more about how you can make that happen. I talk with investors pretty much every single week, almost daily now, about this type of thing. And you can do it even if you're not in the Kansas City market, okay? We can show you the ropes. So again, Luther Wilson III, Upside Property Services. That's all I got for today, so keep me in mind. Hit me up. Peace.